all GTOs, and you're watching Taking Stock.
Counting down to the close, everyone. It's Tuesday, February 24th. This is Taking Stock, and I'm Kristen Scholler, live for you down here on the floor of the New York Stock Exchange. Lots of news moving markets. Today, we are just about to close the day in equity trade. And as of 12:01 a.m. this morning, the Trump administration officially activating Section 122, a bold legal pivot that bypasses the Supreme Court with a fresh 15% global surcharge. Yet instead of a sell-off, we're seeing a defiant rebound. The major averages in the green as beaten down software firms find their footing, helped by Anthropic's effort to reframe the AI threat as a partnership rather than a replacement. And the semi-space is leading the charge. That comes as AMD surges on news of a massive infrastructure tie-up with Meta. It is the perfect rebound rally, some say, before the main event. We're officially on NVIDIA Eve. Speaking of that main event, tomorrow Jensen Huang reveals the numbers that'll either validate the AI anti-bubble fears or ignite the next leg of this bull market. $250 billion in market cap is hanging on the guidance. And we've got Dale Smothers of RDS Wealth, Steve Beard of Covista, who you'll see on the podium in a moment, and Phil Rosen of Opening Bell Daily and Full Signal on deck. Let's take a look at the closing bell podium. Covista doing the honors on that closing bell podium. Markets officially closed for trade. You heard it with the gavel bang. Let's take a look at the tape. The S&P 500 ending the session higher by about 0.8%. The Dow Jones Industrial Average up about 0.8% or 370 points. The NYSE Composite higher by 0.7%. And the Russell 2000 up 1.2%. It's loud down here, so loud I'm almost losing my voice. But the good news is we're going to talk more about these markets, and I'm pleased now to be joined by Dale Smothers, founder and CEO of RDS Wealth. Dale, great to have you on the show remotely today. What do you make of today's market rally?
It's the constant struggle between the bears and the bulls. We've seen a rebound, in my opinion, that's going to continue after the earnings are announced with NVIDIA tomorrow. I think that this continues deep into the week. Kristen, I'm finding that the software is being bought back up. This dip that has been, in my opinion, an overreaction has been bought up, and I think the market's getting it right here to not overreact to places like, or people like Anthropic who are coming out. We're seeing this partnership instead of a replacement, which is exactly what you said. I like that analogy, and I think that continues deep into the week.
Is the bull market thesis still in place?
Certainly is. I think the end of the year we see the S&P 500 higher. You've got the midterm election that in itself gives us historic reason to believe it's going to be a volatile time. Between now and December 31st, I think it's higher, but it will certainly not be a straight line. It's going to be everything but. You're going to have a lot of volatility to come. NVIDIA is front and center. You said the main event. I think that in itself is going to tell us what the next 2 to 3 weeks are going to look like, especially if we consider the bull story, the bull market story for technology. NVIDIA is the load-bearing wall in that story.
How should investors, Dale, be navigating through tariffs? Of course, we saw the Supreme Court ruling late last week, and we saw President Donald Trump's response.
Yeah, I think the tariff announcement is likely to resurface. I think we're going to find the administration coming up with a new way to announce tariffs on countries that do not cooperate. Donald Trump has used this as a tool. You know, this tool has essentially been ripped out of his hand. He has other ways. I don't think that the Supreme Court specifically said that tariffs were illegal, Nicole. Instead, or Kristen, they basically were saying that this particular way that he brought tariffs to be was the illegal process to do things. So he is going to pivot. This administration is going to pivot. They're going to bring tariffs back into the picture. It's going to continue to be a tool. Now, if I'm wrong on that thesis, and instead the government has to repay these tariffs because they were collected illegally, that is likely going to act as a tailwind for the market, because you're going to essentially have a tax return for these corporations that have paid in all of this money. Now they're getting this money back. They've already figured out how to do more with less. And Kristen, that tax return is going to be put to work. I think that in itself could be a mess. The courts labeled it a mess logistically, but when the money actually arrives, if that's the case, I think you're going to see the tailwind for the market.
What are you advising your clients do in this market environment?
Yeah, right now, we like playing an equal weight, the other 493, and then buying dips on names, specifically like Amazon and Microsoft, as we've seen these dips appear. There are a lot of heavy hitters, if you will, big traders that are considering trying to pick at Jensen Huang's announcement coming out tomorrow, and I'm sure there will be attacks on anything he says that's not just absolutely spectacular to try and bid a name like Nvidia lower even. In our belief, though, we've got a lot of these names that should be much higher than they are right now, software specifically, buying the dips out of the equal weight position. So, Kristen, we're essentially heavy RSP, an ETF that gives us equal exposure to the entire S&P 500. And as we see these dips appear, we're picking up positions out of RSP, and we're pulling money out of RSP and buying into these names going into the remainder of the year. We think that, again, the market finishes higher. Just be prepared for volatility.
All right, Dale Smothers, founder and CEO of RDS Wealth. Dale, thank you so much for joining us today on Taking Stock.
Thank you, Kristen.
Okay, everyone, let's take a walk. We're going to see the wonderful crowd here for Covista. Covista is actually going to be joining me a little bit later for an interview live down here on the trading floor. We got to talk some NYSE notables. These are stocks that have outperformed today. And believe it or not, yes, we are waiting the NVIDIA earnings, but we see other companies reporting results too. And that certainly has had an impact when it comes to some of these share price moves and some big share price gains, in fact, that we've seen. So we'll walk on over this way. I'm going to tell you eventually about Home Depot. I'm going to tell you about Keysight Technologies. Both of these, multi-billion-dollar companies when we look at their valuations. And we'll start with Home Depot. Solid day for Home Depot, outperforming the broader market. That stock ending the session up about 2%. The big box giant trading higher after surpassing fourth quarter expectations with an adjusted earnings per share of $2.72. Revenue did slip year on year, with investors cheering a 1.3% dividend hike and surprisingly stable demand in the pro ecosystem. Now, despite the new tariff uncertainty weighing on the sector, the street is looking at the company's guidance as a sign of housing market resilience. All right, another big winner today. This one you might not have heard of. It's not as big as Home Depot, but it is still a multi-billion-dollar company. It's Keysight Technologies, ticker symbol KEYS, and it rose more than 23% in today's session, catching a bid as a key tech-enabled play in an uncertain macro environment. Up after a recent trading update highlighting a 10% jump in revenue per principal. Now, as markets rotate out of some traditional software models, Keysight is benefiting from its unique platform as a service recruitment mode, which saw fee earners climb over 13%, and it's proving that quality recurring revenue still does have a place in the modern tech portfolio. You hear a lot about that recurring revenue and how important, of course, that can be, especially for some of these technology plays. So a great day for Keysight Technologies. All right, everyone, the action continues down here on the floor of the NYSE. And last week, the NYSE's Ashley Masternardi sat down with Hagerty CEO McKeel Hagerty to discuss sweet buys for collectible cars this year. Let's take a look.
NYSE listed Hagerty specializes in insuring classic cars, and they're in New York City, to reveal their 2026 bull market list, essentially the cars to watch. Joining me now is Hagerty CEO McKeel Hagerty. Welcome to the New York Stock Exchange.
Thanks for having me. Good to be back.
This business launched in 1984. It is a family business. You have been involved in the business full time for 30 years. Can you take me through the evolution of Hagerty?
It started as a, literally a retirement business for my parents who had been in the insurance business prior. And they knew that there were these little niches in the insurance world where there was a lot of passion. And wherever there's a lot of passion, that means there's better risk from an insurance standpoint. And it started off actually insuring a tiny little niche of wooden boats, classic wooden boats. Not a lot of people would even think about that as an insurance opportunity. And then it evolved mostly into what was used to be called the classic car space or the collector car space. And now we look at it as this bigger enthusiast vehicle category, which is cars that people want to own. They own because they love them, because they're drivers. They love that whole aspect of driving and owning cool cars and the community around it. So it's been an amazing few decades, and we've been 4 years here listed on the New York Stock Exchange, and I'm having a lot of fun playing with cars.
How large is the classic car market?
It's larger than people think. So when we look at the collector car market, just looking at the US, it's over 35 million vehicles in our kind of target category. And these are cars right now that are registered and that are extra cars in people's households. And they have some other characteristic that makes them interesting. Usually what that means is the values are going up over time rather than, you buy a new car and it kind of goes down in value. These kind of collectible cars, they're going up, and that's our world. And we surround them with insurance. We have our membership offering, which we call Haggerty Drivers Club. And now we have an auction company where we help people buy and sell these cars. So it's a whole ecosystem that kind of works together. And it's a bigger world than a lot of people think.
Is there a specific profile of a classic car collector?
Car collectors, they tend to be in the middle of their life where they have a little bit of discretionary income, and they tend to own their home. They tend to have regular daily driven cars that they drive on a daily basis for a transportation standpoint. And then, they're feeling good about things and they want to go buy that special car that they drive on a sunny Sunday afternoon or for some kind of pleasure purpose. And that's our world. And this pattern of people buying cars like this has been going on for decades. Actually, almost 100 years people have been collecting cars. So it's a long tradition. It's a bigger world than people think. And contrary to popular belief, the next generation is getting into collecting cars. And that's why we published this bull market list, which is to look at not just, okay, what are the cars on the rise, but what are the cars that the next generation is looking at and paying attention to.
That's right. You just launched the 2026 bull market list, essentially the cars to watch. What cars made the cut and why?
It's 11 cars on the list, and they're in different categories. So there's always some iconic, sort of higher value cars on the list. And this year it's the Porsche Carrera GT, which was a car built in the early 2000s. Very high performance, kind of the last analog, a purely analog high performance car. And of course, Porsche is a brand that's been on the rise for the last 10 years. Then there's this whole list of kind of drivers cars underneath that. So a really affordable example, which they made over 1.2 million of, is the Mazda Miata. The second series of them is now really on the rise. That's a car that was $10,000 for a long time, and now it's sort of mid-teens, $16,000, $17,000 car. The most collectible car in the world in the U.S. is the Corvette. And this year, the Corvette Z06, the C6 Z06, which is a really high performance variant, made the list. BMW M5, another, again, kind of driver, fun performance car, kind of the high watermark of BMWs. But then there's another big trend underneath here that we've been watching for a few years, which is kind of trucks and SUVs. We know that, today modern drivers are often buying trucks and SUVs as their daily use vehicle. And the vintage variants of those are really starting to show that collectability. So this year we have a really high performance Chevrolet pickup truck. There's a Dodge Ram Charger, which was kind of like the Dodge version of a Ford Bronco, and Broncos have been really popular lately. And then kind of finally rounding out the list, we always sort of look at earlier kind of vintage classic cars and say, okay, what are the cars that maybe are more like their parents' cars or their grandparents' cars? What are those that are starting to show interest for this next generation? And this year, the team picked the Continental Mark II, which is a really cool 50s stylish going out to dinner car.
All right, McKeel Haggerty from Haggerty, thank you so much for joining us.
Thanks for having me.